The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. You can watch us on Tiger TV online. You can also check us out on your mobile phone anywhere. 9 hours of live trader commentary day at TFNN.mobi. Let's check out where the markets are at right now. And let's start with the indices. So we got the S&P is currently up just a couple points. We have the Russell up 4. We have the Nasdaq is currently up 4 points as well. Pretty much tied there with the Russell. We got the Dow up 15. Copper is currently up a little over 0.5%. Gold pretty flat on the day, only up a point, along with silver flat on the day. We got natural gas up about 0.5%. Oil is only about 7 cents, so pretty quiet there on the energy and the metals. Looking out over at corn and soybeans, the ags 0.2, 0.1. So, 0.4, I guess, and 0.2 there. So down 6 points on soybeans and down about 5 points on copper. Or corn. I got to talk right there. Down about 5 points on corn, down about 6 points on soybeans. We got euro dollar is up 30 pips. We got the Aussie dollar down 2. We got pound dollar up 26. We have dollar franc down 32. We have dollar CAD down 8. And we have dollar yen down 18. Aussie yen's down 24. Euro yen is up 9. Pound yen is down 11 pips. Let's see here. We got the euro pound is up 13. And we have rolled over. If you have not done it yet, roll started last Thursday, so you should have done it already. Again, if you haven't done it, you need to get it done right now. That means roll over your S&P, roll over your Russell, roll over your Nasdaq, roll over your Dow, roll over your oil contracts. And make sure you do that right away on your charts. And not really something that you want to be sitting on, okay? And let me dive in a little bit deeper here. And want to look at one more thing for you on the rolls. And I want to say that, yeah, it's on, so June 15th. So right now, we're going to go into September, and that's going to end. Yeah, so you just had, also, you had your, on June 8th, a week ago, you should have had all of your FX futures roll on over as well. So make sure you got all those rolled over. Let me show you how to do that inside of Ninja. If you don't know already, I can walk you through those steps, okay? And it's pretty simple to do this. And let me see. Let me open on up. And I'll bring it up here. To some people that are newer, just, they haven't learned how to roll over contracts yet. And it's once you learn it once, it's extremely simple. All right. So I'm going to go in and connect my 2 data feeds, and then I'll bring it right up for you as soon as that's done. But it's pretty simple. What you're going to do is you need to go first step, if you're using Ninja, go to your control center, okay? And then on your control center, next step from there, go ahead and go over to your tools, and then go on into your instrument manager. Once you're inside your instrument manager, so you want me to shrink that. Once you're inside the instrument manager over here, then pull up the contracts you want to roll. So let's say we want to roll oil. Click on oil, right click, left click. It'll put it right back in there for you. You'll have the new contract. So again, just right click to get rid of it, left click to add it. And let's see, oil you should have over there. 8, if it doesn't give it to you, the one that you want, if you want to be on 8 right there, just go over here and choose 814, and then you can add it back in. So ES, get right click, left click, put the new contract in. We'll go down to NASDAQ, put that one in, grab Dow, put that one in, go in here to the Russell, grab that one. We'll be rolling over a couple of the international indices tonight, tomorrow. So, and let's see, what do we have? We got DAX and FTSE. We'll be rolling on over tomorrow. You can always, pardon me, check other contracts if you're not sure. You just want to make sure you're always following the correct contract. If you're not sure, then what you can do is go inside the scanner or go inside Nadex, either one. And it'll make it really easy for you to find the contracts because the name of the future will have the month that contract is following in the actual name of the future, or the contract on Nadex. So on Nadex, it'll say like SEP for September, okay? Or it'll say, obviously JUN for June, or on down the list. We can go through each one of those. And let's see here. So we can pull it up. And we can look at Nadex information. We can go to current underlyings. Pardon me. And then we can check out the different markets. Like NK is on 0914. So, right there, so September. So make sure you're looking like the NK 0914 contract. And let's see. Let me put a note on this. And so we got NK right there. So again, just hop it back on. Like I said, we'll be doing FTSE and DAX soon. Go up here and grab your markets right now for like 6A. Throw that over. We'll grab 6B. We'll grab 6C. For Canadian dollar there, we'll grab the euro dollar future. Grab the yen. Let's see here. Grab the New Zealand dollar. Grab the Swissy there. And that ought to catch us up on all those. And I can do a little scrolling to see is there anything that looks outdated. Looks like we got everything moved on over. And one of the things I'll do is I'll grab this chart. If I need to, and I can just double check. So I can go over here and just start looking at it. What do I have on the list? There we go. And to see is there anything that needs to be updated. But it looks like I got all of them up to date. What they should be on right now. And like I said, we're going to have FTSE and DAX are going to be rolling over real soon. Here in the next day or so. Actually, tonight at midnight. Okay, well, that is how you do rollover. So hopefully you got that down. And, it's just one of the things you need to make sure you do. By the way, when you do that, go in and make sure if you have any DOMs open, if you have any workspaces, if you have any templates. Templates actually don't save the instrument, but workspaces do. And a workspace is like where you have all your charts laid out. Any DOMs will save it. Let's see, what else will save it? Market analyzers will save it. So DOMs, market analyzers, charts, and workspaces. So you want to update your market analyzers, your DOMs, your charts, and then you want to save over your workspaces. Don't have an old workspace in there. Just go to File, Workspace, and then Save As, or save your workspace just over to save over it. If you leave an expired workspace in there, it can conflict with that feature is no longer trading it. It tries to pull that data for today on startup. So just a very simple tip for you, but you want to have that done, okay? Let's see here. That'll get us caught up on that. Let's hop on over, and let's talk a little bit about the news. And pull up Forex Factory right here. We talked about there wasn't a whole lot going on for our new trading plan. And so I just wanted to review it with you for today. Today being June 16th, we basically had the Euro Core CPI right there at 5 a.m. It's a little bit different trade. We're not usually doing that trade. And there's like I said, there's a lot of different ways to trade it. But the best way was looking just at a butterfly. And since the trade came out at 5 a.m., you really would not be able to go in on the Euro Core CPI. Looks like there might be a typo and some stuff on here. I'm looking at all this. But the CPI was at 5 a.m. So to do a butterfly on it, you'd have to enter before it and have it expire after it. So that means you'd be looking at like a 7 a.m. expiration. And working on getting a data engine that'll automatically push everything in. And so we're putting those pieces together. And appreciate your patience while I'm trying to get all of that going. But let's start off with Euro dollar over here. And I'll open that up. We'll see what we can get. Okay, so with the Euro dollar loaded on up and checking out when it came out this morning, at 9 a.m. there was a pretty big move. So I've been a little waiting there, unless that was one that we saw that it gets really flat in the morning, which is always a possibility. Okay, so the report comes out at 5. We're looking for about a $35 move on this. Let me throw my toolbar on this, and then we'll talk about getting the plan together for the next 24 hours here. So Euro Core CPI, if we look at the 5 a.m., if we entered at midnight, where was it at 7? Basically flat by 7 a.m., okay? Literally. It did have some movement on it, but you were asleep. The movement actually happened on the Euro Open session, moved down about 29 pips. We were expecting, ideally somewhere around, 20 to 35 pips. So, really that trade would have been entering at midnight and for the 7 a.m. expiration for 30 pips. Minimum profit for an iron condor. So if you did that trade, then it worked out for basically max profit for you. We'll go ahead and check out the other trades when we get right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. And so we're just looking at EURUSD, and we're going to go through a few different trades. We're going to be adding in quite a few more news reports, really just trying to get it down, nail it down, and eventually turn this into like an upfront weekly newsletter service. And I'm just building it with you here, trying to get your feedback. And so I appreciate everybody's input that I've been getting, and just all the emails and the phone calls and just everything, just different ideas that people have had. And so trying to, like I said, expand this out more and more. Let me see. I'm going to actually pull up how many reports we have built so far. And I have quite a few. So just trying to, narrow it down. And so as we track all these, then start getting together a tracking newsletter on actual, how did each trade work out. And then we're building a historical data engine, which is almost done. It's been recording data for the last couple months, as I understand it, hopefully. And then now we're having to convert all the files to work for all the charts. And the beautiful thing about that is that will allow us to actually go back and start testing all these out. So you can look at, hey, what if I would have done this trade at this time? Because right now on Nadex, basically the chart goes away once the contract expires. And so it makes it really difficult to go in and see, what kind of premium pricing was there. And let's see here. Got a lot of reports we're putting together. Trying to get the list of all of them because we have a bunch. But start just tracking all this and putting this in. And okay, so I finally got the final number. It took me a second there. But we got 76 reports, it looks like, right now that I'm gathering data on. So now New Zealand dollar is one of those because we're trying to get that one ready for hopefully Nadex will add that on. There's six of those reports are that. So without that, we have 70 reports not accounting for New Zealand dollar. And even with New Zealand dollar, we can look at potential trades for that specific instrument. And so with that out of the way, we go in, and now we'll go in and catch up and start getting some stats going for you, okay? So let's talk about what else we have. I went over that Empire State Manufacturing. That came out. I know I talked about the euro dollar on that on Friday. And let's see, how did the euro dollar do based on the Empire State when it came out at 8.30? If you would have got in, say, at 7, we actually had a little volatility on it. We had some pretty decent move there. So if you would have got in at 7, which I want to say we got in later. We didn't do that because I said, hey, there's a lot of volatility a lot of times. But let's just say we got in at 7, and we went to, 10 o'clock. Then 16 pips. If you'd have went to 11, then that'd have been like 26 pips. So, and there was a little drop right there of about 13. And I want to say we were looking at like 20 or 30 pips on that. So either way, you'd have been just barely okay. You would have just squeezed by on the trade. But that was on the Empire State Manufacturing. Would have brought in just a little bit of profit. Not too much. But at least the plan did work out. So, and then we had industrial production basically happen at the same time at 9:15. So that could have been the trade you looked at as well on the industrial production. If you would have done that, you would have got in after the big move happened. Okay? So that's the trade where you could have got in like at 9 o'clock. So all this got fanned out at 8:30 off of the Empire State. And I think that was actually the main trade we were looking at. Was the getting in at 9 after Empire State, because Empire State had some pretty crazy moves, like some big moves, some small moves. So if you would have just done the industrial production as well, then what would have happened? So that's starting at 9 o'clock for 9 to 10, because I know we talked about that. So the 9, right here, let me zoom in on this. So if you just would have stuck to the industrial production plan, how would you have fared for 9 to 10 and 9 to 11? All right, so let me change my bars a little bit too. There we go. So hopping in at 9 o'clock, going to 10 o'clock. Right there's 6 pips. Hopping at 9 o'clock, which would have got you a about 14 pip profit on 20. Going to 11 o'clock, right there. 17 pips would have got you about 18 pips on 35 pip potential profit. So not too bad. All right, stay tuned. We're going to go over tomorrow and get you ready for that, okay?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come back here to the Diagnostic Trading Hour. All right, so let's look at what news announcements we got coming up for tomorrow, June 17th. And we'll go ahead and get that Empire State and CPI and industrial production cleaned up. We had the CPI was an actual trade, Empire State was an avoid, and industrial production was the one that we wanted to get into. Now let's look at Tuesday, June 17th. We got a few trades on our list. I got 5 potential trades on my list. 2 of those happen at the exact same time. Okay? We're going to have the PPI at 315. That comes out of the Swiss franc. We're going to have the CPI at 430 coming out of the British pound. Let me go ahead and pull these up on our list over here. So PPI on the Swissy there at 315, and we got that right there. So it's not always the reds. There can be some other good ones. We got the CPI coming out of Britain. And then we're going to have the Zoo Economic Sentiment potentially coming out right here of Europe, German Zoo, and Eurozoo Economic Sentiment Reports. And then we're going to go into the CPI at 8:30 right here in the U.S., the CPI and the core CPI both happening. Core CPI being the main one out of the group there. And then we'll have building permits, new residential construction. So whatever you want to call it, same thing. So got not built, but housing starts being new residential construction. So a few different reports, and let's go ahead and see if I have anything else on my list out of all the different trading strategies. And okay, so we got on the report, and everything is just flat right now. Like the euro and the franc, by the way, have a little bit of strength, but all the other currency pairs are just flat. Looking at my calendar, we'll do a big fundamental Fed review, by the way, too, here at maybe after the next commercial break. But yeah, we got British core CPI or British CPI, and then the U.S. core CPI being the main number out of the CPI numbers coming out. So that core one is the one you're paying attention to more than anything. And that really is going to be our main stuff for tomorrow. We'll see if we'll get through that today, and then we're going to spend tomorrow really getting ready for the FOMC. So we'll be talking about that, and then we'll hop into retail sales, Canada core CPI. And if we can get everything wrapped up earlier this week, then what I'd like to do is start getting the plan together like a week in advance. So that way we're, starting to get ahead. And as we get ahead, it's like, okay, well, next week's done. It's Monday, it's Tuesday. Then on the show, we can have like a couple days of review. And then we can, of course, have also, other days where we focus on like the entire hour on one specific educational topic, on Nadex or on futures or on spreads or on margin, on volume, different ways to look at volume. So we'll have, very topical shows, but news trading shows, and just trying to constantly develop the show to, give it a little bit of variety, but also give it a lot of application status. I don't just want it to be just information or just education, want it to, information that will help you do trades, education that helps you understand markets, and then have some fun application where we go in and we hop in and do some live trades too. Sort of mix it all up. So, and like I said, we've got some good feedback. I've been asking some listeners what they think, what they're looking for, and I appreciate that. Any ideas you got on the show that you think would help, let me know, and I always want to improve it because it's your time too. Okay, so we got the British CPI year over year, and what does that mean? Actually, we'll hop into the franc PPI first. And this is a newer one that we're adding on. The next announcement, so just so you can sort of get this building on your calendar, we got June 7th, we got July 11th. Okay? So, and I just like to have that, so as I build that up, I can start sort of, getting things in order. But June 7th and July 11th. Okay. And so now that we have that, now we got PPI. Let's look over, dive into the details. We're going to be looking at dollar franc stats and seeing is there enough consistent movement during the times that we would look at trading this. This announcement comes out at 3:15. I'm not going to be up at 3:15. So the way I build the newsletter, I'll let you know if there's maybe like this is one that would really only work if you'd, get up late or get up early in the morning, I guess. But I try to build them around the idea of a midnight schedule, where I'll put it on midnight. Of course, for me, it's 11 o'clock. I'm in Central Time. So I'll put the thing on at midnight Eastern for like a 7 o'clock in the morning expiration and see would that have worked out well or not. So let's look over. I analyzed the last 12 plus reports in that process. And so on that, what I'm going to get is on 7 a.m. I have we got 40 pips on the last move. Move before that, we had 8. Move before that, and this is from midnight, okay? Let me pull 30. There we go. One of them, if the time changes, sometimes I have to pull 2 different reports. Okay, so 7 a.m. we got, by 7 o'clock. All right, so it actually did update it a little bit when I moved it over. We had 50 pips, so by moving it to 7 a.m. So let's go down to the next one. Okay, we got 5. Then we got 12. Then we go over, we got 30. And 17. 17. 4. Okay. And then right here, 9. And 4. 30. That was last July. Okay. And then last June, interesting, we had 50. So last June and July basically were the two big announcements. And then May had about 50. So what that does show me is that so far we're on the same cycle. Okay. It looks like there was about 50 to 60 pips on this announcement on May, June, and July of last year. But when we hit August, September, October, November, December, January, February, March, April, that number does not come in that high. And so let's look at, what does it measure? Okay, it's a federal stat. Okay, it's the change in the price of goods and raw materials purchased by manufacturers. And we notice that price has increased, or let's just say that number, the dollar franc has moved significantly during 3 specific months of the year, May, June, and July of last year. But all the other months, it did not move at all. And then when we got to May again of this year, it also moved significantly. So let's see, was there a difference in the report number? First, before we make any assumptions on it's just that time of year, that's just what happens, let's look at just the report number from last year and from this May. So this May, it's dollar franc. If the number, let's see, the price went up significantly in May. Let's go back and check out last May. The price also ran up, and it did so on... Let's see, the actual came in at 0.2. The forecast was negative 0.2, so it was actually an increase. And then the one before that, it was a decrease. The price ran up. In all 3 cases, the price ran up, May, June, and July. One of those, we had a deviation of 0, meaning the number came in exactly as expected. Okay? In another case, the number came in a little bit below expectations by 0.3. And the forecast was 0, came in at negative 0.3. So that's sort of what we had in, let's see, in May, we had a negative 0.3 and a 0.3, so that's like a negative 0.6, okay, from the expectation. And then in, let's see, May of last year, it actually came in at 0.2 on expectation and negative 0.2, so it came in better than expected. So in all 3 cases, we had a unchanged, we had a decrease in the forecast, an increase in the forecast, and then we had a decrease in on the actual from the forecast from the last report, and it always went up. The dollar franc went up, which means the franc got weaker. So that obviously can be a bit perplexing. That's why you don't just trade the number. You also want to look at the cycle, see is there any kind of cycle on the release. You know, is there anything there? And no matter what you think you know, they know more, okay? But the report comes out every month, comes out 14 days after the month ends. It's a leading indicator of consumer inflation. When manufacturers have to pay more for goods, the higher the cost is passed on to the consumer. So it's the purchase of the raw goods, the raw materials, okay, that the manufacturers in Switzerland are having to pay. That'll then, of course, lead to inflation. So that's why it's a leading indicator on inflation. So inflation decreases the value of the currency because you have to have more of it to buy something. So therefore, that's why the dollar franc would get weaker if it was an indicator that led to the belief that the franc was going to get weaker. Therefore, it had less buying power. Therefore, the dollar would get stronger. The dollar would go up while the franc went down. That means the dollar franc rises. Yeah, you have to listen to that about 5 times if you don't understand FX. But anyway, so May we had 0.3. Negative 0.3. We went from 0. So April we actually saw a little, even though we were lower than the forecast in April, you know, we saw a little bit of an increase right there. And so I want to look down here. I'm trying to see like what kind of pattern can we see. May, June, and July. let's see, 0.2. So that actually showed the price getting more expensive. Then we showed the price getting dramatically cheaper. And then July getting cheaper and then cheaper. Yeah, so you're not really even seeing. We can go in here and there's some pretty cool little features. Let's see if we can. There we go. We can actually see what the numbers coming out are, the actual, the forecast, the revision. And this is all about the numbers. It's not about the FX pair, okay? And if there is a revision, I love that because you want to really make sure you're paying attention, but we really don't get revisions on the PPI number for the Swiss franc. But just trying to see, is there any kind of cyclical cycle? And looking at it, let's see, we're going in here to the June, July. If we go back and look at historical data, May, June, July. So we're dropping down. Notice this decrease right here. May, June, July. It goes down. That was 2012. What do we get in 2013? Do we have to see the same thing or not? May's popping up. June massively down. July is back up a little bit. Forecast under and over. Going over to May, June, July. Over. Under. Let's see what we got right here. May, under, over. So I'm just trying to see, is there any kind of pattern? That's how my mind works. I'm looking for any pattern. Above, down, down. Okay, that seems to be consistent right there. All right, so we got, at least it went lower and lower, May, June, July. Basically, there seems to be a decreasing pattern. Can't really see it at that year, but right here. So May, look at that, May, June, July. See how the PPI number goes lower and lower and lower. So that's 2 years in a row. Let's go over here. Let's see if we see the same thing or not. April, okay, May, June, July. Look at how the actual's coming in. Okay? Lower and lower. We'll get rid of the forecast number so you can really see it. So this blue bar right here, lower and lower. All right, and then it picks back up. Let's go back over here. May, June, July. That year it went a little bit higher, but we still did have the pop, and we still had the big increase even on July. Let's see, what happened in July last year? Yeah, we had about a 45 pip move instead of the big 50 pip move. This year, we got May is a pretty low. I mean, that's a big negative number right there. Comparatively, I mean, let's look at the other May reports. Let's see, May. See, like we're pretty positive last year. That May. This May, we have a little bit of negativity, but not near as low as it was. And then, so what do we get on that? We had a negative 0.1. If we go to May of the previous year, yeah, we had 0.3, which was the expectation last time. Here we got 0.6. So, and I mean, you can go pretty far back on this. We can see, is this a consistent annual seasonal pattern? And so just looking real quick, just really trying to get in on this. May, June, July. Okay, we do see that downtrend again, but July had a little bit of an uptick on it. May, June, July, mostly, it did definitely drop down. So May, June got worse, July got worse. We'll come back. We'll get this down. I want to put these pieces together for you. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this details and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So I saw a consistent pattern, and not obviously no pattern is perfect, but there is a consistency of it dropping off in June, July from May. So the PPI dropping on down, cost dropping down. That actually should cause the franc to rise up. I looked over at the seasonality charts during the break on the dollar franc and actually saw that actually lined up. So that PPI number is a very, very good leading indicator of inflation for a position-style trade over on the dollar franc. We'll go ahead and load this up. And you can see how consistently, right around May, look at this, June, July, notice how the dollar franc gets weaker. That's the last, I want to say 10 or 20 years? Let's see here. 20-year monthly. It has a little bit of a problem building that up sometimes. But, there you go, get the dailies, now get the monthlies. There you go, monthly. And then, get the daily, now grab the monthly. Yeah, see? So last 10 years, last 20 years, we can go in last 5 years. Let's see if we can pull that up. Let's see, we'll do this. Then build it up to weekly. And take it all back up to monthly. See, even in the last 5 years, we're getting the exact same pattern. And now, so you go start down to days. So we're right at that turning point. And looks like the last couple years got one nice little spike into July before it drops down. 2 years, yep, had that last spike in July. That's where that's coming from. And then last year, that's the big piece of that spike. So, anyways, but let's look over the overall trend, and that PPI seems to be calling it for us again and again. All right, so let's go ahead and get some stats on the books real quick for at least the PPI report, and then we'll cover some more later.